Today's an honor, guys.
Yeah.
It's our 23rd podcast. That puts us in the top 5% of all podcasts ever created. And I couldn't help but ask one of my coaches, my mentors, and I'm his employee. He's my boss also. He's an incredible man. He's built an empire and from the ground up. And I couldn't be more honored to sit here across from him and for him to take time out of his day, out of his vacation, to be here with us, to add value. Is incredible. And without further ado, I'm going to introduce the CEO, founder of American Pacific Mortgage, Big Valley Mortgage, and Kurt Reisig. Pleasure, brother.
Yeah, Tony, it's a pleasure to be here. So that's something I didn't have planned when I came here, but he invited me to pop in and join on the podcast. And so, hey, why not? If I can have some fun, add some value, hang out with my partner, Tony, then sounds like a good time to me. So really honored to be here and have a chance to talk to whoever it is we get to talk to today.
Yeah, well, we'll send this out to as many people as we can.
There you go.
Hopefully some of the APM peeps can get a chance to check you out.
We'll post it on my LinkedIn and about 3,000 or 4,000 people will look at it probably.
I love that.
Yeah.
I call this the Breakthrough Podcast. My story coming from the absolute hood and trying to break through the different levels of resistance in life.
Uh-huh.
Right? And there's certain points where you hit a resistance, just like a stock was trying to increase, right? And then you just get shot back down.
Right.
You know, in your career, I feel like you're at a point now where you've anchored up to a point where you don't have many resistance points. But do you still remember what it was like in the beginning and going through those phases? And what were some of the ways that you were able to break through every resistance level to continue to climb?
Wow, man, that's such a loaded question. And I'll just first of all say, yeah, I've got anchor points, but even today's market, real estate and lending, is certainly not the best market we've ever seen. That's putting an understatement, as anybody who's in real estate or lending knows. And so, the 37 years now I've been in the business, I've had multiple times like that where you had to reset, and that's this market is kind of a reset. And the key for me in every one of these markets has always been just to be really clear about what I was looking to accomplish and why, right? And it was that clarity of purpose and getting clear about my intentions about how I was going to accomplish my purpose that was really my foundation, and they have to be reset periodically. Times like this, for example, what we thought we may have had planned last year. Well, the economy changed, right? Interest rates changed, the market changed, and so that required me to step back and say, okay, I've got to recalibrate some of the things I wanted to make my priorities have had to change pragmatically to new priorities. Like, for example, one of my key intentions and priorities is to provide leadership to my management team, to help them, keep their cool, keep their calm, keep their resolve through a challenging market, and help take them to the other side, and to a point where we feel like things have stabilized in our industry, and from there, we build, the next level of our growth as our company. And I guess one of the things that helps me is I've been through it many times. Yeah. Right. So I know that this is just a phase. We're in a phase, people, and they come and they go, and they feel like, sometimes they're overwhelming when we're in the midst of them. But just like a really tough real estate transaction, what I learned early on in my career is they have a beginning and they have an end. And even though when I'm in the middle of it, just seems like, it's just overwhelming, what really helped me overcome that stress was the realization that this is going to pass. Mm-hmm. It's a 30, maybe 60-day process, but when it's done, I close a book on it and move on. Nobody died, and I'm still here going forward. Real estate cycles are really kind of the same thing, although they're maybe a little bit longer, and so, gave you lots of answers to that question, but one of the keys for me is just always being clear about what it is I'm trying to accomplish and why for me.
I love that. How do you feel like this crash? This is my first.
Yeah.
I don't want to call it a crash or recession.
It's my term, seismic, correction.
Seismic correction.
Right? Yeah.
I think you said reset earlier, and I kind of love that.
Yeah.
Because I've used this as a reset for reanalyzing partnerships, reanalyzing pay to play agreements that we had,
Yep.
reanalyzing staff, reanalyzing strategy on if we would have stayed in 2% rates, there's no way I could have shifted my marketing to be more driven towards social media, towards content creation, and more of a modern day type of marketing, which I have no idea if it's going to work, but we're going to give it our damn best shot.
Yeah.
Right? Because I think that this is a new way to get exposure instantaneously. And I truly believe in the marketing team that I built to be able to help us get across from it. But how do you feel like this reset compares to 08? Because that's the next one that I could recall. I wasn't in the industry, but what are some of the similarities and what are some of the differences that you see in them?
Well, the similarities, of course, is that, and again, the term I use is seismic shift in some of the speeches I've made, is that the players are going to change, right? This is going to be a great purge of the business. You already see, a ton of loan officers, a ton of realtors who are coming to the conclusion that, man, I can't make it, and they're having to rethink. Never mind that they're having to rethink their strategies. A lot of them are going, I got to rethink my career. This is because they got in when rates were low, real estate was easy, and now it's very hard. And so, through this seismic shift, who the major players are going to change. When we were walking in here, we were talking about some of these big producers. Well, some of them, may continue to be big producers. Some of them maybe, tomorrow's, nobody's, because maybe they're overly focused on refis.
So I got to interject there.
Yeah.
With what you just said, and that we were talking about the major players. One of the guys I mentioned, I ran into his girlfriend at the gym, and we were talking, and I'm personal friends with this guy and his whole team. And
yes,
I really don't see him as competition because we refer deals back and forth if ever needed. And I look up to this person because they're such a big producer.
Right.
To find out that they were down to 6 loans a month, and that was on par with what we're at in today's market. And I told the staff this morning, do you know how exciting that is? Do you know how exciting it is that we're on par with one of the top, maybe 25 top 100 lenders in the entire nation?
Yeah.
This reset is allowing us to be at the same starting line as people who have been in the industry for 20 to 30 years.
Right. So not anymore, right? Because the chairs have shifted.
Yeah.
Right?
Now
and you have shifted with it. Maybe they haven't quite yet. Maybe they're still trying to figure their way out. But whether it's individual producers, real estate companies, real estate agents, mortgage companies are shutting down. I had 2 conversations yesterday with owners of mortgage companies that they're not going to make it. And we're talking about them joining our company because they don't have a solution for this marketplace, which means in these 2 markets that I won't mention, there'll be 2 less companies that were major players just 1 year ago today. They were major players. So
I can't wrap my head around that, Kurt. I can't wrap my head around. I'm basically a chipmunk. I'm not the smartest guy in the bunch. But I saw this coming. I was telling people the end of last year, y'all forgot? Did y'all forget? Like I've been in this 7 years, but did y'all forget that rates weren't this low and it wasn't this easy?
Yeah.
Like, did you not save your money?
Yeah.
Did you not? So how do these giant entities, these giant mortgage companies, not see this coming, not prepare, not save?
I'm smiling because I have a saying in the office. I use reserves, money I've set aside for rainy days, as acorns. So you use a chipmunk analogy. I use acorns as, I save them away. I put away reserves personally and professionally for these kinds of days. But to finish answering your question, seismic shifts, so players are going to change. Who's strong, who the market leaders, how we get business is going to have to change as well, which you're in the middle of creating a new strategy to get your name and reputation out there. And so it's different about the markets. For example, in 07, 08, it was a big purge. The big purge was created by, first of all, yes, volume dropped quite a bit. Also, though, that about 60-70% of the loan programs people were using went away. Subprime went away. Alt-A went away. These were the really bad loan products that caused a lot of people to lose their homes. mainly because they really shouldn't have been buying them in the first place, but they were able to buy homes with nothing down and no income and bad credit. And so they really weren't qualified to make payments on these houses that they purchased. And so when those loan programs, went away, a lot of people didn't have volume. Moreover, when those loans went bad, the investors that we sold those loans to grabbed those piles of loans and they brought them back to the originators, which in this case would be the owners of the company, and say, hey, these loans you originated went bad, you have to buy them back. And because of that, a lot of companies went out of business. Companies we've all heard of, like Countrywide and not Wells Fargo, I meant Washington Mutual, Bear Stearns, hundreds of companies. So it purged, kind of like what we're going now, but a different reason for the purge. Today, it's just because volume's not enough. They didn't save their acorns. Back in 2008, it was because this tidal wave of bad loans kind of washed over the industry, and only of those who had been prepared for it coming. I saw it coming.
Yeah.
And so I didn't do those loans.
Did you short everybody like Michael Burry?
I didn't short everybody. I wish I'd done that. I did my own version of short. Is that they brought those loans to me and I said, I'm not doing those loans. They're like, why? I said, because they're bad for the consumer. And I don't want to sell a consumer a crappy loan because I'm here for the long haul. And so, very different environment, but the outcome is going to be similar, which means there's going to be survivors and thrivers, and there's going to be people that don't make it, or they don't adapt, quickly enough, adequately enough to maintain their status as top producer, like your friend. Guess what? Now you guys are on par, right?
Yeah.
A year ago, he was a superstar. Today, you're a superstar. You're even, right? And so that's a great example of an analogy of what happens in markets like this.
Yeah, it's time for a new shift. I think what we're seeing is a shift in wealth and a shift in just financing all around. Have you seen any influx of like new type of technology influencing our industry through like blockchain or the fintech companies, the development of Web3? Have you seen any of that involvement in the mortgage space?
Well, yeah, I can certainly comment. I've seen some of that, and of course, you could tell I'm got a couple years on Tony, so I'm not as technologically astute. Although I do some videos here and there, so I got that going for me.
Hey, you're great on this. You're looking at the camera.
But this market's going to test that too, because guess what? Suddenly, blockchain and all that is not as all that as it people thought it was going to be, and it may not even survive this downturn. The case against Bitcoin and all that is going stronger. As a matter of fact, they aren't going stronger. It's getting worse right now, and probably will get worse. And of course, there was a lot of companies that when those rates dropped, they fired up all this great technology they had to just plow their call centers with people looking to refinance. But guess what? Those places are closing down in droves too. And so I think technology creates a lot of it creates a different way to communicate. It creates a different way to store information. But my experience has shown it doesn't ever replace relationships. So things like this, using technology like this, creates it's a technological way to communicate with people. But the bottom line, what's happening here is we're communicating.
Yes.
We're planting the seeds of a relationship that in order for those relationships to become really productive, somebody watching here is going to want to connect with you and go deeper, right? But no one's going to pick up the phone and call you and start sending you tons of deals because they saw this video. It's an introduction to them about you and how you do business that might prompt them to call you up and say, I like your philosophy. I like how you think about business. Let's work together. But from there, it's the relationship you'll create that is going to be the basis for your business. I'll give you a great example. Our company, we're a mortgage banker, and what that means is we fund our loans, and then we aggregate them in pools of loans, and we sell them off into what they're called the secondary markets, Fannie Mae, Freddie Mac, big banks and financial institutions. And in order to do that, we have what's called warehouse lines or credit facilities, hundreds of millions of dollars in credit facilities. It gives us ability to fund these loans and then aggregate them and then sell them, 2 weeks, 3 weeks later as we get these pools of loans. And so we have to have these credit facilities to get these loans. What amazes me is I have these major financial institutions that provide me these credit facilities. One of the most important things that gives them the confidence to give my company those facilities is their relationship with me personally, right? To them, it matters that I'm at the helm of our company, and that factors into their decision to loan my company hundreds of millions of dollars.
Wow.
Right? And so with the personal relationship, when I fly back to New York for these conferences, that's the number one thing I do is go meet those guys, shake their hand, look them in the eye, and that makes a difference. And it kind of blows me away because they have all these financials, they have all this data, they got data coming out their ears, but what they want to do is look me in the eye and go, "Hey, Kurt, is everything good?" Yeah, everything's good. We're great. And we're going to be great. And they go, "Great, man, we sign off. You got your line." It's amazing to me.
Wow, that's incredible.
Yeah.
I didn't know that was how it worked. I would assume that they would have done an extensive background check.
Oh, yeah. Believe me, they got everything under the sun. They know more about me than my mom. But there's a lot of things they did, but I didn't tell my mom about it. Sorry, Mom, if you ever see this. So,
as they start to find out, oof.
Mm-hmm.
My mom's seeing some of my stuff and going, "What? When did this happen?"
Yeah.
I love all that. I mean, obviously you're an established businessman, right? What was, I want to take it back to your early days.
Mm-hmm.
What was that start like for you to go from, let's say 0 to 100,000 to 1 million, right? We were talking after my last podcast and I go, making my first 100 grand was fucking brutal, dude.
Yeah.
I had no idea what to do. I've been in sales for 16 years. It took me 13 years to make 12 years to make my first 6-figure year. You know, and then after that, trying to climb up and double X and then 5X. And hopefully next year we can, maybe 10X. But what are some of the strategies you use to kind of go through those levels? I mean, now, and you can go through as many levels as you like.
Yeah. Well, I'll go back. It's funny we talk about this because I was clearing out a filing cabinet that I needed to move at my office. And in one of the drawers I hadn't opened in years were all of my tax returns going back to 1986, the year I got into the business. And I made $30,000 in 1986, which, by the way, I left a job that paid me $45,000 a year to get in the loan business because I love the potential. I love what we get to do. Yeah. And then I had all those returns. And so it was kind of a walk down memory lane. I opened my return and I went, wow. And then I made $65,000 in 1987. And man, I hit 90 in 1988. And then it was 89 when I busted through $100,000 a year in income. And I think for me, again, along that way, I had certain goals. I had certain milestones. You might say I put this flag out there, and I said, "Okay, man, everything I do is to reach that flag, to achieve that flag." It's like climbing a hill on a mountain bike, right? I don't look at the top of the mountain. I just look at the flag I'm heading to, right? So, as I got closer to that flag, what I did inside is I went like, "Okay, this is cool. I'm getting to this flag. I'm getting to this false summit, so to speak, on the mountain." So before I got there, or as I got there, I would start to dream about what's the next thing I want to do. And so essentially what I would do is pull the flag up, move it out, pop it down there again. And now I had a whole nother set of goals. I had a whole nother ambition of what I wanted to create. And then I had to map out the plan for how I was going to get there. So a lot of it, if you really break it down, is you chunk it down, right? The only way to get from here to someplace very far is one step at a time, right? And so what I was very intentional about was creating, goals that I could see clearly in front of me, and I could also see what I felt that they would bring me and my family, and then I would just have just a unilateral focus on that. And as I found myself achieving them, I'd set new goals and move forward. And so, my first 4 years, it got to 1989, I hit that. In 1990, I opened my branch. I got to open my first branch. And I had certain goals with that. In 1996, I formed American Pacific Mortgage. And I could keep going through. There was, multiple milestones over the next, 15, 18 years, taking us to the present time, that, all represent me, once again, taking the flag, moving it. And, and I have one now. I have a very, clear and distinct one now that's different than the ones that I achieved recently. Like most recently, as an example, I had a goal to create a way for our company to really bring value and be sustainable to our employees, which is when I created the ESOP, which basically we gave 49% of our company to the employees of our company. You and all the people who work for you are owners of the company, and you will get more and more shares. And then that was a goal that I achieved last year. Now my most important goal, at least relative to my business, is to make sure my management team, really understands how to navigate challenging times like this, how to navigate through a very disruptive seismic shift like we're going through now, so that in the future, when I may or may not be around because I took a header on my mountain bike and didn't wake up,
Don't do that.
I ride hard a lot. Regardless of what happens to me, my company is good. My employees own a chunk of the company. I've taken care of them. My management team knows how to navigate through a really challenging time like this. And if they can navigate through this, they're going to be fine, even if I take that header.
Yeah.
So, I wear a helmet, by the way. So.
Okay. No,
yeah.
I'm just saying, when you cross over in Arizona, do you take it off?
Yeah, no, never. Yeah, I leave that baby on.
That's what the motorcycle guys do, right? They cross over in Arizona and they take off the helmet.
Yeah.
Was there ever a moment during that path where you just where you had to battle comfort, where you were saying, you know what, looked around, said I have a house, car, maybe a wife, kids, and say, I'm pretty good here. Like I feel like in society, most of us get to a point and you go, I'm pretty comfy here. I think I can stop. And that's where you get the nice job, you get the mortgage, you get the kids, you get the wife or the husband, and then it just becomes a complacent life. And how did you battle that? And did you ever feel it, or was it just never a thought? You're like, I'm not stopping until you seem like you already exceeded maybe potential, right? You're already past that.
Well, so I'm an observer of human nature. I mean, that's one of the things that I enjoy most is watching other people and watching their decisions and the things they do, and then how it influences their life going forward. That's why I love going to my class reunions. I haven't been to one in a while. But you see, like, people you knew from grade school, and then you see how did their life turn out, and what was correlated to what they were doing way back when, and here they are 65 years old, and this is where they are. So I'm really a student of human nature. I've had lots of times when I could have stepped back. I've been able to enjoy a pretty darn comfortable life. I allow my wife to stay home and raise our kids, and and have pretty much whatever I really wanted. But honestly, that's never been important to me. What's always been important to me is okay, so I've won this game. What's the next game that's coming, and how am I going to be best at that game, whatever it is? And so complacency, I think, is the enemy of a successful businessman. And so I watch that, and I see how very oftentimes it's the beginning of the end. When one gets too complacent, they think, oh, I'm really comfortable, and the the trappings of their success become more important than the people who help to get them there, and the lifestyle that helped get them there. So, my wife would say that I'm my own worst enemy, because complacency to me is tantamount to death.
Yep.
I mean, it is. I have to be in motion with something at all times, and so it may not necessarily be building. Continuing to build a company. I've created a management team and an ownership group and the employees that I'm charging with. Hey guys, this is up to you now. I'm still here to advise you and be around to coach you and throw out the occasional podcast. But I'm about ready to hand the baton to you. But that doesn't mean I'm going to go sit on the couch.
Yeah.
Right. I'm going to find other goals that keep me alive. Really, that's what keeps me going every morning. So I got up this morning, took my grandson for on a mountain bike ride, and he's about 50 years younger than me. But you know what? I'm not going to let him beat me up that hill. No. Right. And so,
dude, at 65, you're looking juiced.
Yeah, it's analogous to that's how I live. It's like I'm gonna go as hard as I can until I can't go anymore.
I love
that's just
that.
who I am.
Yeah. What are some of the things that you look forward to in this next phase of your life?
How honest do I want to be with you right now? That's good. The next phase, I think, what I'm looking forward to is spending more time, and more time, helping others achieve what they want. That's something I've always been passionate about. It is help being a facilitator to help people achieve what they want, and share maybe some of the lessons that I've learned or some of the resources that I have available to me, whether they're relationships or financial or tools and things like that I think that I can bring to bear to help people achieve their goals. So that still continues to float my boat. I have investments and things like that keep my mind busy. I'm a finance guy.
Yeah.
I've got an economics degree. I've been in finance my whole life. So money is a game, right? Like business is a game.
Yep.
Business is a game, and it's fun. Even when it's challenging, it's fun because you have to figure out how to overcome and achieve things. And so I like the game of business, and I'll continue to play the game. Maybe a little bit less in the mortgage space because, again, I'm handing the baton off to guys like you and saying, hey, I'm 65, but the world is a lot younger than me. So your generation is better suited to serve your generation than I am. I'm here to provide, maybe some perspective from my experience, but I don't pretend to know exactly what it's going to take to serve your generation and the generations behind you, Gen Z, those guys.
Yeah, it's funny you said we just brought in 2 realtors from Gen Z because I was like, I want to know what makes you guys move right now.
Yeah. What happens after Gen Z? I mean, isn't that the last letter?
Yeah, I don't know.
Do we go back to A?
Double A. We're going to have to just double up on the letters.
Yeah.
Yeah, it's interesting to see what's going to happen. I appreciate you taking time to invest in us and give us the opportunity. I'll tell you what, that ESOP, I will never forget the moment I saw my first, actually I didn't even know what it was. I got a text from some of the managers that we're in a group thread with saying, guys, check your ESOP. I was on my way to Palm Springs Airport, right, and I called One America and I was like, hey, how much is my ESOP account? And they said the number. I was like, Jesus Christ, Kurt.
Yeah, it's cool. You know what? It gives me a little goosebumps to think about it. I mean,
it was incredible.
It was one of the most rewarding things that I've done in business is to give back to the people who got me here. I'm under no illusion of who I work for. You don't work for me. I work for you.
One of the sayings you have that stuck with me was at one of the first symposiums I ever went to. One of the things you were drilling was, the loan officers are my customer.
Mm-hmm. Yeah.
And I was like, wow, that's powerful.
Yeah, and that's our philosophy. I mean, you guys, as I say to my people back at the main office, I did that job for a lot of years. I was a loan officer for 20 years, branch manager and loan officer for 15 of them. And what I tell my people back at the main office is like, hey man, we wake up with paychecks because we have a whole bunch of people out there who don't, right? And so we have to keep that foremost in our mind. They got to wake up and go out and hunt for a paycheck. And we get to get a paycheck. So our job is to do everything we can to make them look good and help them achieve that paycheck. And that's, I'm sure they get sick of me saying that, but that's something that will always be a part of our company's philosophy, is making you guys look good is the reason that, we have jobs.
Yeah, our company it almost feels like a small business. It's this ginormous entity.
Yeah.
The other day I was forgetting that we're in 49 states.
Yeah.
We're in 49 states, and I'm like, man, Kurt takes time to give me a call. Holy,
Well, I can't call everybody, but those that actually take me up, like I said to your guy in your office today, hey, if you need something, give me a call.
Yeah.
And my personal cell number is still on my business card. And so, again, there may be a time where, I'm not as fast as I am now, including on my mountain bike. But, as long as I'm around, when a loan officer needs a Hail Mary, when a branch manager has a problem and they're bold enough to pick up the phone and call me, which really, it becomes something challenging in their head, not because I'm going, what's he doing calling me? I like it. Because as I shared earlier, helping solve problems, helping them achieve what they want, that's what floats my boat.
Yeah,
right?
That's awesome.
Yeah.
It's incredible to hear that. It gets challenging sometimes, even for me running such a small operation. I'm like, when am I going to get some positivity when I pick up the phone?
Yeah.
I guess I would ask, how do you overcome that, right? Like, I'm assuming that most of your phone calls are, I want, I need,
You know what? I don't look at them as a negative. I mean, I think, how do I overcome that is I work very intentionally around maintaining a positive mindset. And I've given speeches about that, about how there's certain processes to go through to maintain a positive mindset, including life practices, habits that we have that support that, whether it's meditation or exercise or whatever it is, or we all need to form a certain number of habits that are designed to support us being able to wake up and present ourselves in the most positive way we can. And then on top of that, a part of that is being clear about what we're doing, where we're going, and why we're going there, which is, intentions, or put another way is setting goals, being really clear about what is it we want in our life and how are we going to make that happen. And so I wake up with clarity every day, and I have a number of practices that I do. I ride my mountain bike. I practice yoga. I meditate. I'm in the gym 4 days a week.
That's cool.
If someone asks me how I'm doing, even if I'm having the shittiest day I've had in a long time, what do I say? Life is good.
Yeah.
Right. So if you say it, you think it, you believe it, you manifest it. And so, but again, it's all by intention. It's not because I woke up, with daisies growing all around me. I know I have to be my best. I've got to work at it.
Yeah, it's not easy.
Yeah.
It's not easy getting up at 4 a.m. every day. I just started writing my first book. Actually, I have the first 11 chapters and the first kind of the put together of what it's going to be.
Yeah.
Which
I'll be excited to hear
I
this.
printed it for you, so I'm going to give you the first copy.
I'm honored. I'm honored because you know what?
Love to hear some input on that. But
I've had a blessed life in many ways. I could go back and cite all the stuff that didn't go right for me, but when I when I come to understand that the things that you've accomplished, the things that you've overcome in your life, and the way you serve the people around you, I'm truly humbled. I mean, I know very few people who serve with the commitment that you serve, and it really is humbling to see and watch what you do. So.
Oh, thanks, man.
Yeah.
Yeah. I mean, it's not. There's a big benefit for me now. Yeah. When I go to comfort, right, I've already exceeded expectations that were set on me just for being born in East LA. I've exceeded my expectations. I thought I was going to make $60,000 a year as a teacher. That was going to be the life. And it so now it's like I've already accomplished everything. I have investment properties. I'm driving the car of my dreams. Like I never thought I was going to have that.
Beautiful car, by the way.
Thank you. And so now it's like, okay, I want to make other people have this.
Yeah.
Because I'm good. Like my aspiration is to become the CEO of a top 10 mortgage company.
I'll be looking for one about the time you're ready.
Yeah. I got a couple tweaks. I got to learn how to speak better. I got to become a little bit more educated on just being a better leader. I think I'm very good at leading in the trenches, and I'm not very good at leading from the back. I'm not very good at being a command post general. I can be in the trenches. I can fight with you. I can throw down. But being back here and analyzing and retooling and kind of giving more of a game plan, that's not my skill set.
Yeah, but I don't know if anybody's born with those skill sets, or those are things that's why we have business coaches.
Yeah.
I mean, I still have 2 coaches. I'm in quote twilight of my career, but I still have 2 business coaches that I meet with on a regular basis, and I've had that practice for way over 20 years, and so. Even now, I still want to get better at what I do, and that's so the things that you want to achieve. Again, there are resources, people like me and others who are fans of what you do and how you do it.
Yeah, we're gonna learn it.
Yeah,
we're gonna put in the work and the effort and learn it and try to influence as many lives as possible.
Yeah,
because that's what it takes. The 2 guys that were in the office, right? They're my priorities.
Right.
Outside of my family, of course, my priority is to get them to where I built 3 or 4 new homeowners, which isn't huge, right? But from my staff,
right?
Like, fuck that's the wins right there.
Yeah, and it's all part of the process. I mean, in 20 years from now, you'll be talking about thousands of people.
I hope so.
That you made that difference for.
I hope so.
Yeah.
Kurt, before we end, I need to ask you how and when do we get out of what's going on right now with the
market?
With the market, maybe not just even the mortgage market, with just the state of the economy right now. There's so much insecurity. I think we're in stagflation, something we probably haven't seen since Jimmy Carter. How do we get out of this as a nation, and then how does the mortgage market come back, and where do you see it going?
Well, I'll take it in reverse. So one thing, the universal thing in our business, in our country, people want to own homes.
Yeah.
Right? And that's not going to stop. Even going back in the Carter years, in the late 70s, early 80s, people were still buying and selling homes. Finance was a little bit more creative during that time period. It had to be in order to overcome the high interest rates. And so that's going to remain. We have a huge generation of people, your generation, that still wants to own homes and buy homes. And so we're going to have to figure that out. We have some big challenges. We still don't have enough homes in our country because of the meltdown and the aftermath of that, where builders just didn't build enough homes. We're short 4 or 5 million homes in our country. And that's really at the core of why, real estate values have, gone up so much. And while you would think they'd be going down more than they have, they've gone down a little bit, but not as much as they might have otherwise, because there's not enough homes in our country. And so I think, this is not going to be a boomerang, the major, hockey stick recovery. I think where do you start? You start by stabilizing, right? And when you stabilize the foundation of the economy, then we can begin to rebuild, from there, our businesses and the economy as a whole. And right now, the economy looks and feels pretty good, although I think it's going to show signs of weakness as we head on the other side of the holiday season. I think that some of the things we're hearing in the job market and the slowdown in real estate is going to start to show itself in the rest of the economy. And I think, ultimately that'll lead the Fed to slow down in their moves by, early next year, maybe even in January, February. And what that'll result in is rates will stop their march up. They'll stabilize where they are, and if anything, pull back a little bit. And maybe it would be wonderful if they pull back to the 5s, right? mid fives. When those are great interest rates in the broader perspective of things. And if values come down a little bit, you take that edge off real estate values, then we're in a market where the people who really want to buy should be able to buy. Maybe not as much as they could have at 2.5%, 3% interest rates, but they'll still be able to buy. And so I think we just build slowly out of it. You have to create the floor first, the foundation, which I think, we're over the next number of months, we're going to be surfing, on that foundation, that floor. And meaning that I don't think the market's going to get a lot worse, maybe because wintertime, holidays, there might be some subdued activity, but I don't think rates are going to get a lot worse, or the real estate market is going to get a lot worse. I think it's going to find that foundation, and then heading into springtime of next year, that's when we can start to build again, right? Start to build on a foundation that's not moving, because what we've had for the last 7-8 months is just moving. I use seismic shift because it's like an earthquake. Everything's moving around us, and we're trying to figure out, where's it going to land? How's it going to be? Once we get a clearer idea of that, then we can start rebuilding our industry. And I'm optimistic about where we are, because again, I've been through a number of these before. They always ended up becoming the inflection points for me to take my company, my personal business, to a whole nother level of success. And so knowing that from personal experience, I look at times like this as saying, well, this is just the price tag for a whole nother level of success that I hadn't even imagined 5 years ago. Right? And so these are opportunities. The markets like these are opportunities, but you got to keep your focus on the future and where we're going.
Yeah, 7-8 months hasn't felt that bad.
Yeah.
It's felt fine.
Yeah,
good. We're a small player. What is your final message to our partners at APM, to the people, to anybody looking to join our company?
Yeah, my final message for folks is one of the things about our company is, I saw that when I walked your office. We're a company that's based on values and a really clear position in the marketplace of who we are and what we do. I mean, we put people into homes, and we do it through a large group of people called loan officers and branch managers, who's our job to do everything we can to make them look good, and that's what we do at APM. We're a company that's owned by our employees. We're not owned by a hedge fund. We're not owned by private equity. We are a grassroots run company by a bunch of loan officers and former loan officers that are focused on, helping our producers and our branch managers achieve their goals. And that's just the kind of company. We're transparent. We've had to make some tough moves in the last year, and we probably may or may not be completely done with that. But we've been transparent about it. We've been projecting, hey, people, this is what's coming, and it may impact you. So we do everything we can to help people understand what's going on and how it might impact them. And again, doesn't mean we can avoid things. We've had layoffs like every other company has, but I don't think there's anybody at APM could say, hey, boy, I didn't see that one coming. And because we've shared with them, hey, man, these are difficult times. Everybody's going to have to chip in to get to the other side, and that's just the way we are. I mean, we had a lot of success together, and now we got to band together to navigate through this marketplace. And the final thing I'd say is we're going to be fine. We are a company that has prepared for, planned for, been through times like this. We know the opportunity is huge on the other side. We have multiple companies and coming to us saying, hey, can we jump on your bandwagon and be a part of taking us to the other side? And we're taking those on that fit with our culture and our values. We're taking them on, and it continues today. As I mentioned, I had 2 conversations yesterday, and we're going to continue to do that. Coming out the other side, we're actually going to have more market share than we did coming into this marketplace. And so, APM is here for the long haul, especially for our customers, our branch managers and loan officers, who also happen to be our owners.
I love it. Thanks, Kurt.
Yeah,
we appreciate it. Thanks for doing this.
Thanks a lot.
Thanks, man.